Right, let's clear this one up because it confuses a lot of people. You probably heard something like, but you have to hit a certain turnover if you're going to go limited, or worse, you're not allowed to have one unless you make a certain amount. It's utter rubbish. But here's the truth. There is absolutely no minimum turnover requirement to set up or run a limited company in the UK. You can start one tomorrow, make zero money for a year, and that's absolutely legal. Now, does that mean you should set one up if you're earning absolutely nothing? Not necessarily, but that's a business decision, not a legal barrier. So why do people get confused? It usually comes down to this. They are mixing up limited company rules with VAT rules or self-employment thresholds or tax efficiency stuff. So let's unpack this. First off, setting up a limited company. Only real requirements are you need a registered office service, at least one director, a company name that is available, and you've got to file annual accounts and confirmation statements every year. That's it. Nowhere in there does it say you must earn £20,000, £50,000, £100,000 a year. That kind of threshold does exist elsewhere, just not for setting up a company. So here's what people are probably thinking of when they talk about turnover limits. Number 1, VAT registration. If your turnover goes over £90,000 in a 12-month period, you must register for VAT. That's a tax thing, not a company law thing. Below that, it's absolutely optional. Has nothing to do with whether your company is valid. Number 2, sole trader versus limited company tax efficiency. This one comes up a lot, as you can imagine. If you're earning under around £30,000 a year, it might not be that much more tax efficient to be a limited company compared to being a sole trader. So some people choose not to bother. But again, that's a personal tax planning decision, not a rule. Number 3, dormant companies. You can have a limited company that's technically doing nothing, what HMRC calls dormant. You still need to file a confirmation statement and basic accounts with Companies House each year, but no corporation tax return if you've done nothing at all year. Loads of people set up dormant companies to reserve a name, prepare for a future project, or protect intellectual property. Now, why might you set up a limited company even if you're not making a huge amount of money yet? Well, look, here's a few solid reasons. Credibility. You might find clients take you more seriously if you're a limited company. It could be protecting your name. Once it's registered, no one else can use that company name in the UK. Next one, limited liability. If something does go wrong, your personal assets are separate from your business assets. It's a much, much safer way of operating. Tax planning. If you're planning to grow, it can help you manage your income and expenses more strategically. But remember, there are extra admin bits. You'll need to keep proper records, file accounts with Companies House and HMRC, do a corporation tax return, possibly run payroll if you're paying yourself a salary, and understand how dividends and personal tax works. So don't let anyone tell you you are not allowed to start or run a company unless you're making a certain amount of money. It's simply not true. The real question is, does it make sense for you? If you're unsure, this is exactly where speaking to a proper accountant who knows small businesses and contracting can really help. Someone who can actually tell you it's not the right time to incorporate and explain your options properly. At Crunch, we do this day in, day out for new startups, side hustlers, contractors, established businesses, and of course, being proper chartered accredited accountants, we know the right time to go limited and the right time to stay sole trader. And it all depends exactly on your situation and what you want to achieve. If you want more inspiration about starting or running a successful company, then make sure you watch all of our business success stories. And one we've got here for you is a great example of Jason Russell, who shares his blueprint to take your online e-commerce brand from zero to hero, how to actually succeed in e-commerce. And this is Jason's own PACRA framework explained. But whether you're just starting out or aiming to scale your business, Jason's incredible PACRA framework will provide you with the tools you need for sustainable e-commerce growth. So check that out.